what asset protection really means and why so many investors misunderstand it.
Well, the asset protection is when you think of anything you're doing in life, you have to be careful. If you're going to invest, good investing begins with the assessment of risk. If you're going to take your kids somewhere in a car or by any transportation, you're going to assess the risk. Is it safe to get there? Is it safe to leave them there? Is it safe to go pick them up? Is it safe to let my teenage son drive or my daughter to start her own business, etc.? So when you look at risk, you're looking everywhere. The highest risk people have is car accidents, partnership disputes, employee actions if you own your own business, competitors if you're really good at what you're doing, clients that you have. I mean, if you're in the investment world of real estate like I am, you will have tenants disputes, staff disputes, neighboring disputes, real estate contract challenges, and all this is based on not just your strategies of what you're doing, but the structure you have. And if you structure correctly, you can proceed with peace of mind, so long as you act prudently as well.
This is the Wealth Vibe Show, where we explore how to create, protect, and expand wealth, not just financially, but strategically and intentionally. I'm your host, Loomba. Let me start with something most investors don't hear early enough: asset protection. It's not about hiding assets, it's about structuring them correctly. Whether someone owns one personal residence, runs a business, flips properties, raises capital, or owns 1,500 doors, the risk profile is real, trust me. And yet, most people are either overcomplicating protection or being advised to expensive, opaque structures that create more friction than safety. So today's conversation is about a simple, transparent, and scalable asset protection structure that works across portfolios, business types, and its investment strategies by stripping equity through liens that can be added or dissolved as investor traction. My guest today is my good friend, Cherif Medawar, an investor, a strategist who built and refined his structure to help clients protect assets without offshore entities, unnecessary complexities, and hiding ownerships. Today, we are breaking down how asset protection actually works, who truly needs it, and why this approach protects investor at every level. I'm joined by, like I mentioned, my good friend, and he's just not a real estate investor and asset protection strategist, but he knows how to design a transparent structure that helps investors and business owners. So without further ado, I'm going to welcome Cherif. Cherif, welcome to the Wealth Vibe Show.
Thank you.
I'm super excited to have you with me today.
Thank you, Venki. It's always a pleasure to be with you, and I'm ready to share as much as I can.
Thank you so much. And today our topic is asset protection that actually works. So Cherif, before we get into the mechanics, can you explain at high level what asset protection really means and why so many investors misunderstand it?
Well, the asset protection is when you think of anything you're doing in life, you have to be careful. If you're going to invest, good investing begins with the assessment of risk. If you're going to take your kids somewhere in a car or by any transportation, you're going to assess the risk. Is it safe to get there? Is it safe to leave them there? Is it safe to go pick them up? Is it safe to let my teenage son drive or my daughter to start her own business, etc.? So when you look at risk, you're looking everywhere. The highest risk people have is car accidents, partnership disputes, employee actions if you own your own business, competitors if you're really good at what you're doing, clients that you have. I mean, if you're in the investment world of real estate like I am, you will have tenants disputes, staff disputes, neighboring disputes, real estate contract challenges. And all this is based on not just your strategies of what you're doing, but the structure you have. And if you structure correctly, you can proceed with peace of mind so long as you act prudently as well.
Great. I think that's a good perception about I would say high level, protection, because you need protection everywhere in your life, like you said. I think we're built like that. I would
Yes.
say our system is built like we learn to protect by default, anyways.
Yes.
But wanted to go a little bit deeper on this subject. But before we do that, I wanted to hear a little bit about you. Tell us who you are, how you got started, and I know you're so successful in the retail space. We'd love to hear your journey a little bit.
Well, thank you. I was studying to be a hotel manager, and I got started in the hotel business. And I was working at a beautiful hotel, Century Plaza Hotel in Los Angeles. And I was working around the clock. I wanted to move up very quickly in my early 20s. I met a billionaire there. The hotel was 5 stars, 5 diamond. We had movie stars in Los Angeles staying there, etc. And he was a very wealthy man. He noticed how hard I worked. And he came to me and he said, listen, I was walking in the lobby one day and I knew him as a guest. And he said, listen, you work so hard. Tell me about yourself. Why don't you come and work for me? It changed my life. I worked for Edmond Bessari for 8 years. I handled a lot of his businesses and affairs in the United States and France. And it was a great opportunity. I learned so much about the world of financing and real estate and development, etc. And then I left on my own in 1989 and I started doing my own real estate and hotel business. And I started sharing with others how to invest in real estate, residential, and then we elevated the game to commercial. Started small, literally with no money, and built it to tens of millions of dollars. And now I'm the largest owner of historic properties in Puerto Rico, which is a U.S. territory, right where the cruise ships arrive in Old San Juan. People can actually learn from me based on the practical application of knowledge, not some theory, something I don't know. I have full-time attorneys working in my office. My payroll is a lot of money per year, but I know the structure. I teach what I do, and I show them the example. For instance, my portfolio is at crepr.com, Commercial Real Estate Puerto Rico. So crepr.com, people can see $100 million portfolio. I'm not some guy who's trying to build it from a condominium and has no idea what's out there. That's the difference, and I'm always happy to share because I found it hard in the early years to get the proper information. People would give me, would share some things with me with ulterior motives. And like even the asset protection we're going to talk about today, I remember I was trying to crack the code and I said, well, how some people are protected? How come some people put their name on a building and some other people are trying to hide incognito doing business? I want to be out there saying, these are my buildings. I want to show my students. I want to show the world. I want to show the banks. So what's the liability? And I cracked the code, and we've been doing it for many years, protecting students and investors, etc.
So how did you crack the code? Tell us that.
Okay, so I've always wondered when somebody gets sued, and let's say they have a property and it's rented, and one of the tenants slips and falls, and that tenant goes to an attorney, and the attorney, the plaintiff attorney, says, oh, this individual has a lot of real estate. Let's just go after him or her beyond the insurance. So then I realized that when they go to court and prove that there is any type of negligence from the owner or any type of situation that could be represented in a way that the landlord, the owner is wrong, they can actually win and get what's called a charging order from the court, whereby the court can force the landlord, the owner of the property, to sell it. And yet, when they sell it to pay, let's say the insurance covers for $1 million, and then they sue for $3 million because the person that fell could have had income for a lifetime of $3 million and now they can't work anymore or whatever. There is that $2 million difference that they go after that owner. They force him or her to sell other assets and to actually continue covering that. The key thing is they force them to sell so they can collect more than they should. But who gets always paid? If there is a bank, if there is a lien on the property, a mortgage or a trust deed lien, the bank always gets paid. I said, so how can I actually structure my businesses my real estate in a way that I can also put a lien that if anybody wins against me or is just too smart or too clever to sue me in a way that is not fair, that they collect more than my insurance. They can actually force me to sell and take my equity, which is the difference between the property value and the debt I have. Let's say I have an equity sitting there at $500,000, they will take it. So how is that possible? And I realized that there is a way to do it where I can create my own liens and record it against the property. So if I actually get sued and lose and they force me to sell, the bank gets paid, and also an entity that I own that has a lien on the property gets paid. And I can explain it further if you want.
Yes, I would love to learn more, but I know I have heard about liens. There's so many different kind of liens and so many opinions about the liens in the market.
Yeah.
So before we go deeper into the lien, like how you structure it, so you get paid on the lien too. So can you just like take a minute and kind of define different kind of liens for us and kind of like explain a little bit more about the liens, how each lien is different and how they behave
Excellent.
differently?
Yes, ma'am. So that's a very important question because people in general think there is only one type of lien. And there are three types of liens that are upheld by the courts, federally speaking, and throughout the United States. The first type of lien is I got a loan from the bank. So the bank gives me the money through escrow. Okay, escrow is the entity between buyers and sellers. They handle the money. And then the title company records a note, a mortgage note, and the bank shows that, hey, we gave Cherif $700,000 because the property appraised at $1 million. He put $300,000 down to buy it, and there is a first lien. It's either a mortgage lien in judicial states or it's a trust deed lien in non-judicial states. Let's not worry too much about judicial or non-judicial. The only common denominator is there is a lien that gets recorded on the property, and that's a first lien. They have a priority position, and that's a lien that has to be satisfied through monthly payments until I pay off the debt, and then they give me the deed free and clear of the ownership of the property. That lien is upheld by the courts nationwide. What's the second type of lien that's upheld by the courts? Let's say I hire a contractor to build a pool in my backyard, and he tells me, listen, Cherif, I'm going to build a pool for $50,000. Wonderful. Next thing you know, he does a work change and he says, you know what's going to cost you an extra $23,000. I say, no, I'm not going to pay you that. Oh, but what do you mean? I had to do this and we discovered that. And it says right here, I can do change order within so much percentages, and we have a dispute. That contractor can record what's called a mechanics lien. It's a work for hire. I didn't pay. I had agreed to pay, and they would record that second type of lien that can be recorded. It could be a second lien recorded against the property, and that will be upheld by the courts. Hey, Cherif Medawar, you hired this contractor. You did not you approved that he's going to do some changes, etc. You didn't pay. That's the second type of lien. The third type of lien is a type of lien that has to do with some type of like partnerships or agreements. And for example, you and I, let's say, Vinky, you and I start in LLC. And you say, Cherif, we're going to be partner 50-50. Okay, that's wonderful. Or whatever, 60-40, it doesn't matter.
Thanks.
We have an LLC created. We're joint venture partners. And you put $100,000 to fund the LLC, to capitalize it, to put money in it. And you say, Cherif, I put 100,000 there. Can you put 100? I say, Vinky, I'm so sorry. I don't have the 100 now. But you know what? I will put in the LLC, I owe you $100,000. And I'm going to put that in the LLC as that I owe that money. You're going to say, well, that's not good enough. I want it secured by something. So I will record that 100,000 against my property. And I say, okay, I owe the 100,000 to the LLC to gain that partnership, to fund the LLC, to capitalize it, etc. And I will record that lien against the property. And there is a promissory note that gets recorded. So anybody in the world could see that this LLC, I owe to it $100,000 and it's recorded. And there will be, of course, any lien, any payment that will be made later. There is some interest that I pay. Minimum interest by the IRS is 3-point-some%. Let's say it's 4% a year. And I have to fund that through some payments, etc. So I create that note. I record it against the property to show you, yes, I'm going to fund that LLC. That type of lien is the third type of lien that's upheld in the United States by the courts. And listen to this now. You are partner with me and we're doing this and we're growing, whatever. If anybody checks the title on the property and checks the liens run title, they will see that there is a first lien to, let's say, Bank of America and a second lien to an LLC. So with that type of structure, I realized that I can create an asset protection that could be extremely powerful in the United States no matter what happens. So let me now take it the step of how to set up properly, that we crack the code. I call it cracking the code, truly. And I love cracking codes because most people don't understand. They have an idea, they have a strategy. I'm going to buy and sell homes, but they don't have the right structure. So they may not be able to get the proper loans. They may not be able to grow, may not be able to defend themselves if something goes wrong. So how do we do it? We set it up. I don't need to partner with anybody. I just go and set up a Wyoming LLC.
Okay.
That Wyoming LLC, why Wyoming, by the way? Let me answer that in advance. I know you'll ask me that because everybody asks me, why Wyoming? Why not Ohio or whatever? Wyoming is where the limited liability companies, LLCs, had started in the United States in the early 70s. And it has charging order protection. So Wyoming is set up in a way that because they created the limited liability company that limits the liability of anybody or even eliminates it, it depends on the structure, they have the code system with what's called a charging order protection. I'll give you the code later of the charging order. Meaning if I'm set up in the Wyoming LLC and I'm operating properly based on certain rules, if anybody tries to sue my LLC, the LLC does not have to disperse any funds out because the state itself has rules that say we protect these structures. So it's extremely powerful unless it's fraud or something that can prove criminal fraud or something. But that's not what we're talking about here. I was talking about I'm doing business. Somebody wants to go beyond my insurance coverage because it's not to substitute the insurance I'll have on my assets or my business. It's to supplement it. So how we do it? We set up the Wyoming LLC. We get a tax ID. We set up the virtual bank account because you can set up bank accounts anywhere in the United States. Like we're doing banking on Wells Fargo from a distance online. This is how it's set up. We set up a Wyoming LLC. We have an operating agreement that's about 42 pages that explains the reason it exists. And I'll go over that in a minute. Once it's set up, I say I'm going to fund it. I'm going to capitalize it with a certain amount. Now, let's say I have a bunch of properties. And my total equity in the bunch of properties is $1 million. So I'm going to fund the Wyoming LLC for $1 million. So we write an IOU for $1 million, a promissory note for $1 million, and we're going to actually create a lien against each one of my property. Let's say, to make it simple, 4 properties, $250,000 each. And let's even make it simpler. 1 is my home, 2 investment property, and 1 is my business. So I'm going to create that note with the Wyoming LLC. I'm going to say, I owe you $1 million. $250,000 will be recorded against the home, $250,000 recorded against the first investment property, the second one. And those are liens that are literally mortgage liens that get recorded so I can make payments to the actual Wyoming LLC to fund the entity and capitalize it. And I'm going to, for the business, I'll record what's called the UCC1 filing, Uniform Commercial Code 1. That is when you borrow against a property, it's a mortgage lien. When you borrow against an actual business, that's an actual business lien. That's called UCC1 filing that goes with the state, with the county, and this one is an actual mortgage lien that gets recorded. So now there is $1 million recorded against all my assets. That strips the equity. There is also a lien to the banks for each one. And let's say the business is free and clear and it's worth $250. So I stripped the equity of all my assets. I still have my insurance, and you may even have umbrella insurance for your investment properties. You may even have a business with what's called errors and omissions. Let's say you're a doctor. Let's say you're a broker, and you have all the proper insurance. But your fear is for somebody to go beyond that, to try to get to you, to try to get to your equity. And I've seen people, my own architect about, 11 years ago, his net worth was over 5 million. He was in his 70s. And when he got sued because one property had some issues, they went after all his equity. He had insurance. First, the insurance denied the claim. Then they said contributory negligence because you didn't do this, because you did the drawing and then you also were investing in the property. They wiped him out. Imagine at age 73, he had to start from scratch. And imagine that 2 years before, when he started working for me, I said, let's set you up this way with this asset protection where we can create a Wyoming LLC for you. We can put a living trust as the owner that's going to flow through you and your wife, and he had a daughter, and then your daughter, God forbid something happens to you, will be your daughter. The Wyoming LLC, interestingly enough, is anonymous. I mean, you have to have a registered agent there, but for anybody to get to who is the owner, they have to have a court order, serve the registered agent, which is going to give the actual living trust as the owner. The living trust does not have anywhere in the United States who the beneficiaries are. And despite all this, I told him, if you get called in the court, you say the truth. Why? Because you have insurance, you have errors and omissions, you have all this good stuff, and this protects your equity. So it's very important to understand that that proper structure would have saved him $5 million of equity that
Exactly.
he had. Yeah.
Seriously, this is like mind blowing right here. So I think you already answered my question regarding the trust. I wrote down when you were talking. So follow-up question, would this work, this structure for trust and estate? Because a lot of people, they create estates, and then the trust so that, the money filters through to their heirs or, it just goes smoothly.
Absolutely. So I'm very big on estate planning. So somebody can set up the trust, and that living trust that is the beneficiary of the LLC in Wyoming is actually flowing through to the family. That's exactly part of the probate and the estate planning. It also simplifies the entire thing. So now, God forbid, that person now is driving and he hits a dentist that's riding a bicycle. He did not notice, he was adjusting his radio or whatever, hits the bicycle rider who was a dentist. And that dentist earns, I don't know, $500,000 a year in income. And now he goes to an attorney and says, I was on my bicycle, John Doe hits me, he was driving the car and all this, let's go after him. The attorney is gonna first look at if there is a merit to the case. Oh yeah, the guy was negligently driving, he hit you, you broke your elbow, your hand is shaking, you can no longer do your business. So you're missing, I don't know, $5 million of income that you could have received for the next, God knows how many years that you were gonna work, 10 years or something. We're gonna go after John Doe, the driver, because he ruined your life. Now, the first thing that attorney is going to say is, I'm going to take it on contingency because that's their specialty. Because they're going to go online, they're going to see, oh, John Doe has this ownership, they got that, they got this. I mean, some attorneys say, oh, you can put it in LLCs, you can put it in land trust and all this, but you can see when it was transferred. It's very actually easy to even track what the history of any property is and who bought it and where the beneficiaries are and all this, because it's called discovery. When there is a lawsuit, they go in, you can't lie. You can't say it's not my property, I'm not the beneficiary. So the attorney is going to, within minutes, find out that John Doe, the driver, has a lot of assets. Now, if John Doe is set up like, no idea, like put properties in their name, they're going to go after John Doe for all what he has beyond the insurance. Insurance will cover maybe $500,000 or $1 million after the insurance goes through a lot of steps of fighting it, because they are great at collecting premiums, not great at paying out claims. And they're going to go after forcing through the courts a charging order to actually get the person to sell enough properties to pay that person. That's what happened to my friend, the architect. Now, if the person is set up a little bit wiser in separate LLCs, like many attorneys I've seen even on seminar presentations. Set up this one in LLC, this one in separate LLC. They got you got 8 properties, you got 8 LLCs, and then they actually usually hold the box and say, if they sue one property, it's just whatever is inside that LLC, you're going to lose that equity, but it's okay, the rest is protected. Well, I don't want them to go after one penny. I have insurance. It was an accident. So how should John Doe be set up? Let's assume now, he understood what we're talking about. We set him up with the Wyoming LLC. Set up the actual tax ID the actual paperwork for the operating agreement that shows 13 business reasons to exist, not just asset protection, but for instance, for business planning, to consolidate family funds, to plan for the future financials of the loved ones. There are so many business reasons, and one of them is asset protection. Now, that operating agreement is for the Wyoming LLC that has charging order protection. And what happens now, it flows to the living trust. It can flow to them, but it's better, an extra layer of protection to flow to a living trust. And they have a registered agent in Wyoming. And now that Wyoming has a lien that they recorded against the property, and they make one payment per year, just interest only payment to the Wyoming LLC on the promissory note. 11 payments get accrued to the principal, so more is owed later, okay? And they have that on each one of their properties. One LLC in Wyoming records liens against, I don't care how many properties they have. I had a guy with 16 subways in the Midwest. So one LLC records liens, stripping the equity of all the assets they have. One setup. And now what happens is, if that's the person that gets sued, that's John Doe who's driving, and he gets sued, the attorney is going to look, he's going to see, oh, they got a home, they got investment properties, but they owe the bank so much, and they owe some Wyoming LLC so much more. There is nothing to go after. Guess what that attorney is going to tell the plaintiff, that dentist who had the elbow accident? Listen, he's going to say, client, I want to sue and have you win, and I'd love to take contingency of a third of what you're going to get, but we're not going to get anything because this person that hit you has no equity, but they have insurance for $1 million. Get the $1 million and let's move on with life. If the person says to him, oh no, I want to sue for 3 million, for 5 million, they're going to say, okay, you're going to have to pay my hourly fee now because I'm not taking this on contingency. There's nothing to go after beyond the million. They have insurance. We're not going to, even if we win, we're not going to collect. Why? Because if they win in court and show negligence, the judge is going to say, but they weren't really negligent because they have insurance on the properties and in their business. Well, you can win. I can give you a judgment for 5 million. And we force them to sell.
But you're going to collect yourself anyways at that point, exactly. And that's no use of it. But let me interject over here. So is there what I'm trying to ask is like everything is legal, any legalities involved in the structure?
100% legal. Not only is it legal, it's full disclosure. You show up to court, John Doe is asked by the judge, were you driving the car? Yes, Your Honor. Do you own these properties? Yes, Your Honor. Who owns the Wyoming LLC? It's in a living trust. And who is the beneficiary? I'm the beneficiary with my wife. I'm the beneficiary with my kids. I'm the beneficiary with my loved ones. Okay, then the judge is going to say, when was this Wyoming LLC set up? Let me see the operating agreement. Oh, it was set, there's the filing of the LLC. Oh, it was set up on July 2nd, and the incident happened in August. So it was set up before the incident. You were not trying to illegally transfer assets or encumber assets, like put liens. You set it up before the incident. This wasn't planned. So do you have a tax ID? You have a bank account? They have to, by law, uphold this because it's one of the 3 liens. But listen to the best part. If that person who got hit insists on the attorney to sue John Doe and go after him and they win, what they end up with maybe a $5 million lawsuit. But what happens is they cannot collect beyond the insurance, so they will collect 1 million. What happens to the other 4 million? It's uncollectible. They cannot collect it because even if they force John Doe to sell the assets, the banks get paid and the Wyoming LLC gets paid. And they can't access anything from the Wyoming LLC. Why? Because it has a charge.
So I do have one question here. What is the order of payment? Because these are the liens. I know mechanic lien goes first.
The order of payment goes first. In the United States, the entire concept of real estate is set up to benefit creditors. And who are the creditors? They are the lenders. That's why the lenders, any bank with a bank license can get the money from the Federal Reserve. How are they getting federal money, the banks, and loaning you? When the economy was bad, the Fed charged the banks 0 interest, and the banks charged us 2.5%, 3%. Economy got better, the Feds charged the bank 2%, etc. So how? Because they know they can foreclose. The banks have the power to foreclose. Any lien holder. Now, if you loan me money Vinky, and I don't pay you, you have the power to foreclose because you take a lender position, and under the United States system, it's all land ownership and protection. So we have placed the Wyoming LLC to have a lien. So the order, to answer your question, first lien gets paid first, second lien gets paid second. All the liens that are recorded in the order in which they got recorded, they got paid. And now what's left in equity.
When is the order they get recorded? So the senior debt is going to always come first. And after the senior debt, if it's just the Wyoming LLC, they're going to get paid after that. Anyways, if there's nothing in between, just for the sake of simplicity, I'm making it.
Yes. Any lien and Wyoming LLC could be, let's say somebody recorded a lien. Somebody recorded a lien by actually having a second position because they have a credit line with Chase Bank. So they have a free and clear property. They get a credit line for so much, and they record the lien on the actual property as a second lien. When there is the lawsuit and they're forced to sell, the bank, if they use that credit line, gotta get paid first. So first lien is always the most powerful. Second lien, second powerful. Third lien, third powerful. What's left? You see my point? That's how it works. It just has to work this way. There's no other way around it. It's not like, no, we don't care. We're not going to pay anybody. The only way to supersede all this is to be the government and create a tax lien, because the tax lien is the only one that to supersede everybody. That's why if there is a property with a mortgage loan and the owner does not pay does not pay the property tax, the government goes in and creates a tax lien and informs everybody that's on record for liens. And that's why the bankers will go to the tax lien auction and they will redeem the lien and foreclose on the property. It's extremely powerful and it's the best structure. But I want to go back to the point of the person wins a $5 million lawsuit. The insurance pays $1 million. The other $4 million, the plaintiff cannot collect. You know what he ends up getting? He ends up getting an actual tax bill from the IRS, because that's called phantom income. They did not collect the income, but they will owe the taxes against it, which makes it impossible for anybody wanting to sue. So let me give you two numbers that are very important to show you the power of this structure. Number one, the Wyoming LLC charging order by the Wyoming Act 17-29-503 is what protects you by being set up in Wyoming. We set you up in Wyoming. We actually set up the paperwork for the liens. You tell us how many properties you have. We set it up for you. We send you everything by email to sign and record the liens against your properties. That structure is upheld by the courts nationwide federally. I had attorneys presenting this in seminars on behalf of my company. Now, the actual power of this is that you don't have to actually pay off anybody. You just have to have insurance and you disclose everything. Now, what if they win more? They don't understand the story. They sue you and win, and you go to court, say, yes, Your Honor, I made a mistake. I was backing up. I hit the guy. I was not looking. I'm sorry, but I have insurance. I'm not a negligent person. It was a mistake. It's an accident. And they ruled against you. The IRS ruling for phantom income for that person that's not going to collect and is going to get a tax bill is 77-137. That's the Internal Revenue Code for phantom income. That means that person that won $4 million but did not collect a penny may end up getting a tax bill of up to 50% in states like California. And if states like Florida, it'll be about 37%. That means just imagine that would owe $1.5 million. That person, last step before they actually win the case, if they're that dumb and they go to the last, that attorney is going to say, wait, you're going to end up with a tax bill you can't pay. IRS is going to make you make payments for God knows how many more years. Drop the case. So it became a lawsuit avoidance. So how would you like it to be avoided? You be protected and you can continue doing business and grow with absolute certainty that you are protected. You're doing everything right. You're doing everything by the law and you're protected. You don't have to set up separate LLCs. You don't have to hide and put anonymous companies. None of that will fly. You can go to nolo.com and see court cases where the judge asked, what do you mean this is anonymous? Where do you live? I want your address. Where do you go to sleep? You're in contempt of court. Or
Yeah,
you have an
exactly. Oh my
offshore
God. I
entity.
love this. I love this strategy. Oh my God. But I wanted to ask you this.
Sure.
I mean, I think we are running out of time too, by the way. But let me ask you this question anyways. Can you explain at a high level, I would say at this point, if somebody's in the capital markets,
Uh,
like a capital raiser or a
yes.
syndicator, syndicating the real estate projects.
Mhm.
So how would they incorporate this strategy into their day-to-day or their structure, basically? That's the question I wanted to ask
Excellent,
you.
excellent. We specialize in syndication, and we do education for people who have real estate funds to show them what assets to do, how to structure properly, and we work with attorneys that actually set up these funds, and we show these fund managers and syndicators how to protect their investors. So, any good structure like a syndication or a real estate fund, they are protected by being set up as a limited liability company. But they
Mm-hmm.
take investors' money and they go buy let's say, an apartment building, and they put, let's say, $3 million down payment, and they
Uh-huh.
got a loan for 7 million. That 3 million is exposed. People can sue them, especially if they're
Right.
syndicator and fund manager. So we show them how to set up the Wyoming LLC. We set it up for them. We create a lien. So the lien becomes the protection that now the 7 million owed to the bank, 3 million owed to the Wyoming LLC. The Wyoming LLC flows to a trust. So they are actually protecting the investors' money from any lawsuits, because lawsuits happen. And we've seen a couple of years ago, actually, some people on Facebook saying, okay, I've been sued. We're shutting down real estate syndication, etc., because it's a one asset. Real estate fund has multiple assets. So real estate funds, we create the liens, we set up the Wyoming, we create liens for them. So it's extremely powerful to protect people that are conducting business. I have this lady, she does, buys homes and expands them and builds pools and all this in Texas. And she said, it's so hard to be a contractor and investor as a female lady. I have a syndication now and everybody's trying to sue me always. We set up that ultimate asset protection structure for her, and nobody's able to sue her, because as soon as they go to an attorney, I want to sue her and I did this, the attorney says, there's nothing to go after, go settle with her. She regained her power and her position.
Wow, I think this is such an eye-opening episode, Sharif.
Yes.
I think I seriously need to have you back. My mind is just like blown by all this learning about this new strategy out there, and not just like stacked LLCs. It's like series of LLCs you create for the asset protection. I think that's where a lot of wealth managers, a lot of people talk about that.
Yeah.
But this is something interesting that you're sharing today. Go ahead.
Thank you. And when people come to us and say, hey, we heard you on, let's say, they will come and say, okay, Cherif, we heard you on Vinky's podcast and we're very interested. Can you help us set up? We have the entire thing with my in-house team. It's a turnkey. We form the LLC paperwork for the articles of organization.
Uh-huh.
We email you the customized corporate minute book for everything for the LLC. It's not needed like a C Corp, but we just get you all what's needed to make it airtight. We create a specialized operating agreement. This is 40 some pages long, and for some it's almost 60 pages. And based on the people's, we do it all. And we send you the LLC operating agreement. We file the whole thing for the LLC with the EIN number. And we give you that power of ownership. And in one email, you receive everything, including who is going to be your resident agent there, will handle everything, your tax ID, and the few banks that you can talk to set up the virtual bank account. Now, let's say you're a trader. Let's say you actually trade stocks and options, and you got 100,000 sitting there or more or whatever, and you also have your investments in real estate. We show you how to also transfer that ownership of that trading account into your Wyoming LLC that you fully control, because it flows through to the trust account that you control. It makes it so much easier. God forbid somebody dies and their spouse is lost. What do I do? How many LLCs do we have? How many bank accounts? It's so
Yeah.
simple. You have the trust, everything flows through you. You avoid the probate, you avoid complication. God forbid something happens to the second spouse, it goes to the kids, exact same percentage. It's such an airtight, complete promissory note drafted for the individual, all the paperwork and everything done for them. And let's say you have that, and the bank, you're going to sell the property, and the title company calls the bank and say, we see you in the first position, this property is being sold, what's the loan balance? And they send it. Then they call you and say, we see that there is a Wyoming LLC that has a lien on the second position here. What's the loan balance payoff? You just say, I am the owner. You forward the email to them for the certificate of ownership. There is no lien. This was to actually fund the LLC, to capitalize the LLC later. I don't need to capitalize it for another 250 or 500. Remove that lien. The balance is zero. It's a tax neutral structure. The actual LLC flows through to you. So it's, you make a payment, one payment a year, it comes to you. You can make the payment for the property tax and whatever from that. It flows through back to you. It's a disregarded entity. It's extremely powerful and so simple. If your spouse, I'm talking to people here, if your clients, you have a spouse that's not too involved in the real estate, he or she is busy being a stay-home parent, or they are actually busy with their own business, you can explain to them the structure in minutes. As a matter of fact, if I may tell people, there is a video I've made of it. Can I tell them where to go to watch the video?
Yes, please go ahead. We are actually out of time. Go ahead and plug in the video.
Sure. So if you go to a website called kissmyassetsgoodbye.com, KMAGB.com for short, just the initial, KMAGB.com, kissmyassetsgoodbye.com. There is a video I made, this animation video of 3 minutes that explains the whole structure. How an individual who has a home and couple properties and investment business, how they actually can protect themselves, what we do for them and how it's structured. It is so powerful. There is no monthly fee. There is nothing. And usually if you try to get an attorney to set it up, structure step by step between setting up the LLCs, doing the paperwork, the operating agreement, individual liens, etc., it's so expensive. It's about $15,000. If they go to the website, they'll see it's 10,000. But through the link, we're going to put a link with you. As I promised you, Vinky, we're going to give a special price to everybody that want to set up this and protect themselves. The link here will guide you to set it up for $69.95, $6,995. I pretty much guarantee you will not get it set up for that, even with us in the future. It's only through you, through the link down there. And if people have questions about it, hey, does it work for me? But I have this property in Ohio and this property over here. Click on the link below that will be actually posted, and you can schedule time with my VP, Ashley Jones. You'll see Ashley at cmrei.com, which is our main company. So Ashley is ASHLEE at cmrei.com. Click on the link. You will get access to scheduling a time with her, get access to talking to her, get access to enrolling right away so she can follow up with you, with our attorneys and everything. So sorry, I had so much to share.
I think we are way over time, but I still wanted to have the rapid fire with you. And definitely wanted to have another session with you to dig even deeper than whatever we talk about that today. So let's go through quickly the rapid fire. There's going to be 5 questions. You're going to answer it in 1 word or 1 sentence only.
Sure.
So very quickly, first question, what is the biggest misconception about asset protection?
Hiding.
Yeah, I think so too. So why do most investors wait too long to protect their assets?
Everybody thinks they are the main character in their movie of life, so they think this won't happen to me. One word is unaware.
Yeah, I think I'll take both, 1 word and 1 sentence. So what creates more risk, visibility or poor structure?
Poor structure. 2 words.
Who should prioritize asset protection immediately?
An investor. Also, if I may add, a licensed practitioner. And a third one, if I may, anyone getting married. Before you get married, you can set up and strip your equity so you don't need a prenuptial agreement or a postnuptial agreement. The way we set it up protects you before and after. Extremely powerful.
Great. What does true financial security allow you to focus on?
Allow you to focus, on growing.
I love that. I like all those answers, Cherif. This is such an eye-opening episode today. You shared a lot. There was such a powerful conversation, and it kind of, it reframed the asset protection in such a powerful way for me. So I think it's not a fear-based planning. I would say it's like a very intelligent structure. And thanks for cracking the code for everyone, not for just yourself. And you already shared with us how people can reach out to you. So you wanted to share one more time. Ashley's email address so people can go ahead and
Yes.
schedule a call. And also you're offering through our portal $6,999 or $997. Whosoever's listening, if they wanted to plug in, they can use our code and go to Cherif to create their asset protection, right, Cherif?
Yes, ma'am. So Ashley, ASHLEE at cmrei.com. And thank you. And thank you for having me last year on the single tenant building investments and how we do them. When we started, the plant behind you was kind of weak, and now it feels strong and growing. I think it likes what I said. I love plants.
I love it. Love it. That's so good. And thank you again. And thank you everyone for tuning into the Wealth Vibe Show. If today's episode helped you rethink asset protection as a protective strategy rather than a reactive move, share it with someone who's building real long-term wealth. So stay inspired, stay intentional, and keep building your wealth vibe. So until next time, bye for now.
Thank you.
Thanks for tuning in to the Wealth Vibe Show. If you enjoyed the episode, be sure to subscribe and leave us a 5-star review. And don't forget your free gift. Download the Busy Professional's Guide to Real Estate Investing at loombainvest.com. See you next time with another amazing guest and another powerful conversation.